Welcome to ESGX Live, the community for information and education to inspire collaboration and action to help create a more resilient and more inclusive economy and indeed society. With me, Nigel Lake in New York, and my co-host in San Francisco, Paul Herman. Today, we're delighted to bring you a special episode to talk about the growth of green banks and working with the Coalition for Green Banks to really give us some very useful perspective on what has been achieved so far and what these sorts of organizations can do for us. Coming up, we have a discussion, first of all, by Reed Hundt, which I think will be absolutely fascinating. But first, very briefly, let me just give a little bit of perspective as to why I think this matters so much. As you may have seen in that little bit of preview there, in the world of business, we've been very focused on making the most of our scarce resources. This is something that economically we've all taken for granted through our working lives, probably, and governments do the same thing. So we're obsessed with return on capital and maximizing profit and minimizing government debt and managing unemployment and all of that. But through all of this, and certainly through my career, and we've all seen different versions of it, and Paul is surrounded by the smoke of it right now, we have overlooked the most important scarce resource we have, perhaps, which is the environment and how much we depend on that for our day-to-day lives, for our quality of life. And this brings us to the place we're now in, where there is significant crisis. There are bushfires, there have been terrible floods, there have been droughts, and it seems to go on in this terrible cycle. Meanwhile, of course, with the recession that we're going through, the question comes back to what we should be investing in. So all of this is perhaps a great reminder that we live in an environment where these boundaries on what we do matter a huge amount, and also that there is an enormous opportunity if we tackle these problems in the right way, actually to create growth, to create a more resilient economy, to create a more inclusive economy, and help build our way out of this particular crisis. So with that as introduction, I will hand over very shortly to Alex just to introduce Reed. By the way, this is being streamed live on YouTube, so please do say hello in the chat function down the bottom if you're with us in the Zoom meeting. Share this on the internet. Try to amplify our guests' voices. We very much appreciate that. And so with that, I will pass over to Alex. Thank you very much. Look forward to it.
Great. Thanks so much, Nigel. Thanks for hosting us here. I will very briefly introduce our keynote speaker here. You came to learn about green banks here, and there's nobody better to tell you than the father of the green bank movement, Reed Hundt. Reed was chairman of President Clinton's FCC in the 1990s, from 1993 to 97, and he's later served on many different boards and advisor to many different startups, including sitting on the board of Intel and working for McKinsey. And he's currently the CEO of the Coalition for Green Capital, which is the organization that many of us on this call are with. He's also the CEO of Making Every Vote Count, which is a initiative to create a national popular vote. So without any further ado, I will turn it over to Reed.
Thank you very much. I have now learned how to start my own video. In early March of this year, my wife and I came to a second home that we bought in California near Stanford. We have 3 grown children in the Bay Area, so that's why we came here. We've been here ever since because of the pandemic. For the last 25 days, we've been warned not to go outside because of unhealthy air. And for the first 10 of those days, the fires got within about 10 miles of our house. So far this year, 26 times more acreage has burned in California, 26 times more than just last year in the aggregate. And there's no question whatsoever that the excessive dryness and the astonishing fires, are associated with the climate catastrophe that is being experienced in many different ways all around the world. Just for the heck of it, let's go back to the last time that the planet was on the verge of this precipice. I looked this up. It was 55 million years ago. 55 million years ago, volcanic activity and a variety of other negative feedback mechanisms produced a global warming that increased the global temperature by approximately 5 degrees centigrade. That's exactly the path that the world is on right now. And to give you a sense of the comparisons of these two historical eras, one prehistorical, if you will, in that time period, it took several tens of thousands of years for the impacts to translate into temperature increase. However, human beings did not exist as a species for another 54,800,000 years. Had they existed 55 million years ago, there would have been, at the very most, handfuls of human beings huddling at the poles, sleeping through the long winters and just barely surviving. That dire prospect is, in fact, the path that the world is on right now. And we're moving at a pace that, well, it's been calculated. We are now emitting every year 10 times more carbon dioxide and other greenhouse gases than in the years during that period of climate change. 10 times more. And so naturally, the speed of the change is that much bigger. And what it all, I think, can be simplified to say is that if the global economy, especially led by the United States economy, does not move from the carbon platform to the clean energy platform, if that does not occur within 15 years, then it's not possible for science and technology to come up with a solution that will abate climate catastrophe. Science and technology can do lots of things, but it cannot utterly and completely transform in a few years the global climate. And so that's where we are. We've got to have this change occur over 15 years. The elements of the change are pretty simple. They have been debated for years, but now the nature of the crisis is clarifying. Number one, all electricity globally has to be made by renewable sources. None can be made by natural gas or coal. We can't go without electricity, so it all has to be either hydro or, for countries that have nuclear or solar or wind and nothing else. Number two, all transportation has to be electric. And number three, all industrial processes have to be electric. And then number four, there needs to be a tremendous amount of reforestation and afforestation. And along the way, these transformations will be greatly eased if old buildings are made much more efficient. There are other things too, but those are the basics. If those basics are accomplished in 15 years in the United States, then we will not only lead the world in the transformation, but we will be able to use the geopolitical power of the United States to, joined up in particular with Europe and essentially with China, to cause the entire world to be on a clean energy platform. I'm actually extremely optimistic that everything I've just said is feasible. An essential element of it is that the investing world be ready to pour staggering sums into the clean energy platform. Here's the good news. The investing world is very eager to find places to invest. Pension funds in particular are long on cash, eager to find reliable investments. The global economy is awash in uninvested capital, eager to find new places to invest. It turns out that TikTok alone doesn't require enough money. And all kidding aside, the transformations of the communications technology sector over the last 20 years simply do not require anything like the amount of capital that's available, but the transformation of the energy sector does. In the United States alone, more than $400 billion needs to be invested every year for the next 20 years. That's a big number. The purpose of green banks at the state level, the local level, or the national level, and we have all of those, except for that we don't yet have a national green bank in the US, but we have state and local ones, and we have national green banks in Rwanda and South Africa and other countries. The purpose everywhere is to have an institution that is not political, that is nonpartisan, that is nonprofit, sometimes part of government, sometimes independent. Have an institution that is committed to removing obstacles to private sector investment, that is committed to providing solutions to collective action problems, that is there to ease the way for this massive private sector investment to effect the great transformation. And what I want to say about this is now just the situation in the United States. First of all, there is a piece of legislation called the National Climate Bank Act of 2019 that's been introduced in the Senate, and it has been passed in the United States Congress. It is part of an infrastructure package. It is not likely that the Republican-led Senate will take up that package, but it is likely that it'll be revoted in the House of Representatives in January and passed again. If it is, if the Senate is reasonably close, 49-51, 50-50, then it is likely, in my judgment, that that same bill, either the infrastructure bill that includes the National Climate Bank or the independent National Climate Bank, it's likely that it will also be passed in the Senate. It's fundamentally a bipartisan idea, and it is really desirable for the investing world to have this facility open the door to private sector investment. And so we can hope and believe that the private sector will be pushing to have this passed. It's more likely that a President Biden would be enthusiastic about signing it than a re-elected President Trump, but it is not out of the question that a re-elected President Trump would sign it, for the simple reason that he has long said that he would like to have as a signature item the signing of a infrastructure bill, and there is no more dramatic infrastructure investment than the new clean power platform. There are some other attributes of the National Climate Bank that are extremely appealing politically, economically, and from a social justice perspective. This is a case like William Tell shooting the arrow through many apples at one time. We have more than one apple that this vehicle will serve. The principal benefit that is immediate is the creation of new jobs. The estimate that we have from a legitimate economic advisory firm is that if the National Climate Bank were put into effect with $35 billion of capital joined up with hundreds of billions of dollars of private sector capital, 5.4 million jobs would be created. 5.4 million jobs would close about half the gap between unemployment as is predicted in the fourth quarter and full employment. Closing half the gap at one fell swoop is extremely appealing. Number two, I already mentioned that the investment sector would love to find a way to put staggering sums into profitable investment. So that's a plus. Number three, this facility actually would accelerate greatly the move from carbon to clean. And it's the speed of that move that's essential to abating the climate catastrophe, to winning the war against climate change. So as long as we keep burning at 10 times the rate of 55 million years ago, as long as we keep burning carbon at that rate, we're writing the planet's death sentence. So the speed of changing from carbon to clean is absolutely essential. And this is the way to increase that speed. It's also the case that just in the last year or two alone, there's been an emerging awareness of a chronic problem that is going almost unaddressed, and that is that there are localized communities that are particularly disadvantaged by the current carbon-based economy. If you've ever been in Beaumont or Port Arthur, Texas, which I have been in, you're living in an environmentally damaged area, and it is damaged because of the carbon industry all around it, which has poisoned the water and fouled the air. And that's just one example among many sad examples. It is also the case that there are specific communities where economically they will be greatly disadvantaged by the shift from carbon to clean. Easy example comes to mind is a community that is centered around coal mining or natural gas exploration or exploitation. So it's going to be necessary from a justice perspective to address communities that are horribly negatively affected by environmental problems or are going to be very severely affected by the transition from carbon to clean. And green banks have the specific purpose, in addition to the others I mentioned, of being able to address those communities on a county by county, town by town, zip code by zip code, family by family basis. There is an emerging, widely held point of view on this topic. It remains to be seen whether or not my optimism about legislation in the United States will be vindicated, but not that much more time remains to be seen. What I do want to say in closing is, if everyone here does whatever they think of, whatever they can think of to be supportive of the creation of green banks at the national, state, and local level and at the nation state level, this is the right time to put the shoulder to the wheel. This is the right time to push in this direction and accomplish all of these incredibly laudable purposes. And now just one very small thing. You know, my daughter, who's an immigration lawyer in California, she and her fiance had to postpone their wedding because of the combination of COVID and smoke. But they went ahead and bought a house, and then there I was on the phone with her 2 days ago, and she was crying about the smoke all around the house. Very personal, just one person's story, except for that there are millions and millions of people all around the world who have the same situation. You know, they're caught at the moment of hope and change to have their lives play out in a positive way, and yet they are suffering the impacts of the global climate catastrophe. So if you're a generation removed like me, or if you're in the same generation, you know, it's possible now through our much maligned social media that we really all come together in a movement. And the specific arrow point for this movement that we're here to talk about today is green banks. And thank you very much for letting me kick off this great session.
Reed, thank you so much for that keynote. That was inspiring and enlightening. Really appreciate all your comments. One question before you go, and if I could ask the U.S. Green Bank team to come on video while we get ready. There was that chart that showed widespread public support. If Republicans in those states are all above 50%, why is it not more prevalent yet? What is it, the super vocal 25% Republicans that are against it? What's the dynamic? What's going on there?
Let me take a shot, Kerry, and turn it over to Johnny and Jeff as they wish.
Okay.
We are nonprofit, and you're such a great friend of ours. You know, we've polled on this topic from time to time over several years. There has been a profound change in public opinion in the year 2020. It was never before the case that a majority of Republicans were supportive of a government intervention on a meaningful scale to address climate change. It was never the case that there weren't any Republicans. There were always some Republicans, but it was never the case that a majority was in support. It is now. In terms of the left, the left has always been in support, but never this strong. The issue has never been this prominent. And independence, the same, it has never been this prominent. It's a profound, profound change in public opinion. Different people are scratching their head about exactly why, but I think that the answer that the pollsters give me is as good as any other answer, which is it is the immediate and dramatic and horrible impacts on the climate experiences in real time that are opening the door to perception. It's not so much, Kerry, that people are changing their minds as they are moving from I don't know or maybe to, oh yeah, I really believe.
Because I'm living it, I'm seeing it.
Because I'm living it.
Or I know
because
somebody.
There was a lot, in all the polling in previous years, there was a lot of skepticism that the science was right. And frankly, scientists were, not evenly balanced, but there was always somebody in the science world saying on the other hand, or maybe, or it's a high probability, but not a certainty. All of that has changed. The scientists are 99.9%. There's always somebody, but there's 99.9%. But primarily, those that have been undecided have decided. And
thank you for that.
That in turn has produced the following, which is, and I've been involved in some way in presidential elections since 1988, 88. Was the first convention that I was at. Let me just say, this is the very first time that climate change has been one of the prominent issues in the debate between the presidential candidates. And without question, the Joe Biden campaign has a more robust and specific platform than any other presidential campaign, even than the Green Party campaigns, because theirs is so specific. Last thing I'll say is the vice president on the Democratic ticket, Kamala Harris, is a sponsor of the National Climate Bank Act.
Great, thank you for that. All right, so let's segue over. We have a dream team from the Coalition for Green Capital, from Reed Hundt all the way through. So we're going to introduce now Jeff Shub, who's the executive director of Coalition for Green Capital, Alex Craigie, who's the director of the American Green Bank Consortium, and Jahi Wise, who's the policy director. All great friends. Great to see everybody today. And I'm Kerry O'Neill. I run Inclusive Prosperity Capital, which is a boundaryless green bank here in the US that focuses on underserved markets. And we're a member of the American Green Bank Consortium. Prior to that, I was at the Connecticut Green Bank. So Jeff, let's start with you. And we heard from Reed at a high level, and maybe a couple of things right off the bat. Just what is a green bank? Just make sure we all understand what we're talking about here. But really, like, what and why do we need a national climate bank? Like, what? Why can't government incentives in the private sector? Like, why do you even need this thing? So maybe if you could tackle that, just to start off the conversation.
Yeah, sure thing, Kerry. Thanks so much for pulling this conversation together, and for everybody joining this afternoon. A green bank. So first of all, it's not a bank. It is not a depository institution. It's not regulated as a bank. What it literally is a mission-driven clean energy investment fund that is capitalized with public money that can then use that capital in specific and targeted ways to overcome a range of business and finance problems that halt the rapid deployment and adoption of clean energy solutions. So whether it's specifically providing a capital intervention like subordinated debt into a renewable energy project, or a market development solution like working with a network of contractors to help them understand how to use financing to sell home electrification solutions. It's sort of an organization that has the flexibility in the outcomes orientation and the capital to actually move markets, overcome these barriers, to then allow for much greater private investment to come in. And I think an important thing that we all have learned over the years working in the green bank space is that this is not about availability of capital. It's partially about availability of capital. It's definitely partially about the cost of capital, but it is just as much about demand creation as it is delivery of capital. There are, endless examples in this space of where, capital is made available for a solar loan, for example, but who actually is just going to wake up one day and say, hey, I want to take out a solar loan to put solar on my roof? That population is incredibly small. And so we have to think proactively about how do you invest in demand creation? How do you build those go-to-market channels? How do you find the developers who actually want to serve certain markets? And then how do you put together a financing package that actually makes the project work from an economic perspective? Where, the way we think about this is the two economic constraints that cannot be violated are, you're not going to convince the private sector to take a lower rate of return simply for investing in something that's good for the climate. We can all hope, but I don't think that there's not a lot of evidence to suggest that's going to happen. So we have to be able to meet investor return requirements. And on the other side is, we can't make customers and businesses pay more for clean energy than they were for fossil fuel energy, just because there's no political appetite, and frankly, it's not socially and morally just in a lot of parts of the world, including in the United States. And so it's within that framework that we have to be able to figure out, how do we deliver clean energy solutions into a growing market, achieve much greater market penetration, and satisfy those economic constraints? And so that's how you end up with a green bank, a mission-oriented clean energy finance organization, with the goal that that's working within the understanding that that organization itself will never have the amount of capital that it's necessary to build a sort of rapid transformation. And so it's working closely with the private sector to bring in the capital once the barriers have been knocked down.
So knocking down barriers, filling gaps, catalyzing markets, opening up space for private capital, which we heard from Reed, plenty of private capital to come in and get involved in what for many folks is a new asset class. Not all, but for many.
Exactly. And I think, it's sort of amazing to look at it this way, but non-hydro renewable power, let's just say solar and wind, obviously there's been a huge flow of investment into this space in the United States, of $50 or $60 billion of investment in the United States in those two technologies alone last year. It is still the case that they only make up about 10 or 11% of clean energy, of electricity market share in the United States, which is growth from about 2% 15 years ago. So if we think about, all right, in the last 15 years, market share penetration has grown from 2 to 10%. In the next 15 years, if we're going to meet a target of 2035, 100% clean energy, it's got to go from 10% to basically 70%, where the rest is coming from hydro and nuclear. That kind of acceleration is not going to happen under normal market conditions. And again, it's not because there isn't private capital. It's about how do you make that private capital go where it isn't traditionally going to go, for all sorts of reasons, one of which is you named, that this is a new asset class, and it often takes a very long time for large institutional investors to get comfortable putting tens of billions of dollars into a new asset like this.
Yeah. So Jeff, we're gonna get to Alex and Jahi in a sec, but before we leave you, can you touch on just like what sort of things does a green bank finance? And in touching on that, Michael, I can't see your last name in my chat box, mentioned the argument for triple bottom line, requiring a lower ROI, but we know that's now been debunked because, these investments can do well as do good. So as you talk about, just touch on some of the projects, talk about the, different return expectations that you might see.
Yeah, and I think a lot of this is about figuring out, you can sort of bifurcate the market in some sense of, there are transactions that if a series of actions are taken to remove barriers, i.e. incur some sort of a cost that the private sector is not willing to incur, then that investment from the private sector can flow at normal, rates of return. If the private sector were tasked with overcoming those barriers themselves, training contractors, setting up program administrative structures, things like that, doing a ton of project preparation, then they would be charging a higher rate of return, which would then erode the underlying economics of the project, and the power sold to the customer would be too expensive.
Which is another form of de-risking, right?
Exactly.
Market transformation,
right.
De-risking.
The money's got to be spent by somebody, and it either is going to be bundled into the return requirements of the private investor, or it's something that a nonprofit can do because it's mission oriented. So there's sort of those sorts of projects that are fundamentally about project preparation, risk mitigation, taking on costs that the private sector either isn't willing to take on, or if they did, it would sort of erode the market economics. So examples of that might be, here's a simple one, is like home energy efficiency, residential home energy efficiency projects. Any bank can make a loan available for a homeowner who can say, I'm going to use this money to upgrade the energy efficiency of my home. But is that commercial bank going to find a series of contractors that actually want to sell with this product, train them on how to use it, develop marketing collateral, create a back-end software solution to be able to manage the deal flow, make sure that the term and interest rate match the expected useful life and the savings of that project?
And that the equipment is actually efficient, or
making sure it works. So it's so there's that category of project where it's a sound investment. There's nothing wrong with the credit profile. There's nothing wrong with the technology risk. There's just all those sort of upfront costs and barriers that prevent a rapid adoption. There are segments of the market that do not work economically with the returns that private capital typically requires. And this is, to Reed's point about low-income communities of color, targeted investments where environmental justice is an imperative, but the economics don't necessarily look the way they would to a private capital provider. That's where you either need purely public money in some cases, or you need a blend of public and private money to bring down that cost of financing, where the blended effective rate from the customer perspective makes that offering cost effective for them. From the private investor perspective, they're, if they're taking 80% of the deal and it's at the rate that they need, it's no skin off their back if there's the other 20% is coming from the green bank at a much lower cost of financing.
So there's a way to play a role structuring to de-risk, but also there are whole classes of impact investors who would be attracted to something like that, and it may be right in their return profile. The sort of folks who are investing in CDFIs, for instance.
Very
green banks.
Exactly, right? Very, very, very similar. And I think. And to that point specifically, I think what's distinct about green banks is they are purpose-built and very, very good at figuring out how to actually put money into clean energy projects. And I know from a lot of impact investors, the challenge they faced is not so much around the return requirements that they're seeking. It's just how do you actually get your money into projects? If you want to really know your money is directly addressing climate change, and I think correctly, the best way to do that is put the money into a project that directly mitigates greenhouse gas emissions. How do you find institutional partners that are purpose-built to do just that? And that's really what green banks do.
That's great. So Alex, let's turn to you now. And you've done a lot of work setting up green banks around the country, and that's where we first met, right? Is in Connecticut, getting that initiative to get that set up. So tell us a little bit about what's needed to create green banks, and maybe talk a little bit about the differences of some of the models out there, and maybe even talk about how they'd interact with a national climate bank. That's a lot there, so take what you want. Don't take all our time, because we got to talk to Jahi and Andrea too.
Thanks, Kerry. So yeah, there are a number of things that are necessary conditions for green bank creation, but probably the two most important are political will and capital. And what we've seen over the past, since 2011, when the Connecticut Green Bank was started, is we've seen a lot of states and localities ante up, put in some money to invest in their green banks. And they've seen just incredible results. I mean, we have, as you can see on the map here, we've got 16 green banks across the country, stretching from Hawaii to Rhode Island. Collectively, since 2011, we've caused over $5 billion in total investment in local clean energy economies. And for every dollar that gets put in, $3.40 of total investment follow it. So you get $2.40 of private capital coming, 60 cents of private, you got $2.60 of private capital coming with each dollar that a green bank brings. So you have this multiplier effect that's really appealing from a policy perspective. and helps you get the most bang for your buck. So what you've seen are these organizations that have had limited capitalization, that have demonstrated a proof of concept of this green bank model. You have a lot of, to be frank, wins for states that have invested in their green banks. But what you see right now, and as you know, as probably anyone sentient is able to note at this point, there's probably not going to be a lot of money on the state and local level becoming available in the short or medium term. And to that end, a national climate bank steps in to save the day. So a national climate bank, as Reed alluded to, and we'll get into in much more detail, is a mechanism for funding these state and local green banks, as well as creating them. You know, I've been involved with creation efforts in a number of different green banks, and the same thing, like I said earlier, is critical. You need capital and you need political will. And the political will is almost always there, Jeff. You know, how many we're in talking in dozens of different, we've talked with dozens of different states across the country who haven't yet actualized their green banks, but the demand is very much there. So it's that solving that capital issue, and that's where the National Climate Bank comes in.
Yeah, and I have to say, as a member of the American Green Bank Consortium, we would absolutely use money that was made available from a national climate bank. So here, I echo that heartily.
And just to build on something Alex was saying, to the point about, you know, where there's demand, you know, we've had projects and conversations in places like Missouri and Louisiana and Utah and Montana, Indiana. It's not Ohio. There are plenty of places that see the value in having more investment, more economic development, job creation, lower energy costs, and oh, by the way, this lowers emissions. When you package all those things together, it's like, who's going to be opposed to this? And it's doing it in a really market-friendly way. As Alex said, it's just most of those states just don't have the capital.
Yeah, exactly. All right, so Jahi, tell us where we're going then. What's coming up? How are we getting there? And why do we need to do it? What problems are we solving?
Yeah, no, and thanks, Kerry. Thanks all for joining. This is a great conversation. So let's revisit the argument for a second. So we can agree there's a climate crisis that's in process as we speak. Many of us are impacted directly by it. That to mitigate further damage from that crisis, we need to rapidly change our energy consumption patterns and the profile of the resource that we use to generate energy. In the US over the last decade, we basically had a lot of innovation at the state and local level to create these institutions that facilitate that transition. And where we are now is we are finally coming to a place where we have the political consensus to create a national mechanism for facilitating that transition. And that's the National Climate Bank, as folks have mentioned a few times on this call. And the National Climate Bank will do a few things that are kind of additive to what state and local green banks already do, and then a few things that are beyond and are absolutely essential to facilitating the kind of transition to the clean power platform that folks have referenced a few times. First, so the kind of like what the National Climate Bank does that supports the work of state and local green banks. As mentioned a couple of times, it's provision of capital. These institutions are generally undercapitalized in every market, and I think Kerry can attest to this. There are more projects than capital. And so if you were to have an extra 10 or 15 or 20 or $50 million, you potentially could electrify that 1,000th or 10,000th home and reduce the emissions profile in that geography that much more. And so providing, you know, the National Climate Bank will be a mechanism for pulling public capital into a nonprofit market-oriented entity that will then reallocate that capital down into state and local green banks that allow them to go deeper, going deeper. The kind of next function that's kind of additive is allowing state and local green banks to go broader. And so as we see on the map, we have currently, 15 state and local green banks in existence. We probably have another 10 to 15 that are nascent and probably will come online, in short order. But that doesn't cover the United States of America. That doesn't facilitate the full transition. The National Climate Bank would be the mechanism for creating state and local green banks in new markets to enable this innovative mechanism that's worked well at facilitating private investment to actually do that in all the places around the country and all the different markets that are necessary for us to really see the kind of emissions reduction at the velocity that's necessary to avert the worst impacts of climate change. So that's, National Climate Bank helps green banks go broader. And then I think the last thing that Jeff alluded to is it also, and this is kind of where the National Climate Bank begins to provide unique value to the market, is it allows green banking to go bigger. And so, in all these markets, there are projects. Think of transmission, think of stranded asset securitization that are bigger than either the capital capacity or the jurisdictional focus of a specific state or local institution. And right now, there's a gap in kind of our financing mechanisms across the federal government, across state governments, across the local landscape to actually address these projects. The National Climate Bank steps in as an institution that can actually help, securitize stranded assets, enabling communities to shift from coal-fired generation to renewable generation, enabling, the creation of a offshore wind hub that enables a bunch of private wind developers to access profitable markets. There's like a number of projects like that in this space, at least folks talk about, it's like, this would be great if someone could do this. Well, the National Climate Bank is the mechanism for doing that and essentially solving these complex problems that are necessary at scale to facilitate the climate transition. And then the last thing that I'll pause, we can take some questions and talk more, is facilitate this kind of equity focus. And as Reed mentioned, there's like 2 or 3 different ways that equity is really key as we think about the climate transition. First, there's the communities that have been negatively impacted by fossil fuel infrastructure. So those are folks who live next to refineries or fossil fuel extraction operations. And those are the stories we're familiar with. There are whole sections of the EPA that deal with them. Those communities, as we transition away from fossil fuel infrastructure, will need investment rapidly to revitalize themselves, to reimagine themselves, and to mitigate those and to deal with the harms, the residual harms of this fossil fuel infrastructure. The National Climate Bank will be one of the primary mechanisms, in addition to existing federal programs to facilitate that. Second are those communities, as Reed mentioned, which currently depend heavily on fossil fuel infrastructure. So think mining communities, who also may actually experience the harms, but who see a large part of their tax revenues come from fossil fuel based infrastructure. Those communities need to find new ways to drive their economy. It just so happens that investing and starting businesses in climate infrastructure and clean energy deployment is actually a really good way to restart the economy. It's work that's geographically dependent. It requires a similar skill set as to those who are currently working in fossil fuel infrastructure, et cetera, but their startup capital needs to facilitate, one, the projects to actually come online to get those businesses going, and then 2, the capital to support those businesses coming online. And so the National Climate Bank is an entity that's uniquely positioned to actually understand the market and private flows of capital to support those businesses and kind of economic transformation. And the third group, and I think this is probably the broadest group in this country, are those who have the impact, who could potentially be negatively impacted by the transition from fossil fuel to clean energy by seeing their energy prices go up. And so it's an expensive undertaking to shift an entire economy, a global economy, off of fossil fuel, known, some would argue, heavily subsidized fossil fuel infrastructure to a clean infrastructure. And there are potential price impacts throughout the market that could, A, just push folks even further into economic distress, and then B, could slow the progress of the climate transition. And the National Climate Bank is uniquely positioned to think and act strategically in different markets to support and make sure that subsidized capital flows to make sure the energy prices for end users don't increase. So I'll pause there. Those are the kind of, I think, four of the things. We can talk more. I have a list of 24 other things that we could talk about that the National Climate Bank would do. But those are 4 of the things.
And what I love, a lot of passion from all of you. What I love, Jahi, about what you just touched on too, is you're really addressing the S and the ESG. Yes, there are energy and environmental things that we're addressing, right, with climate change, but there are a lot of social impacts as well that done right, we can address too. We have several questions and I want to get to a few before we turn our attention to international. Sarah Ross asked, do you see an opportunity for the National Climate Bank to tackle rapid broad-scale decarbonization of our K-12 sector? Any obvious deal breakers there? Any examples of existing green banks investing in local K-12? Like, yes, yes, yes. Like, yes to all of the above.
Yeah.
I want to expand on that briefly.
Yeah, I mean, really, really briefly, the most specific example I can think of is Rhode Island Infrastructure Bank did a program to finance the upgrades of a large portfolio of municipal buildings, which I'm almost certain included schools. Yeah, I mean, it's a chronic problem. In the case in Rhode Island, I think there were actually almost every one of the buildings had received a free audit from the utility. The project had been scoped out. They knew it would save money. There was just no municipal bonding capacity in the town to be able to issue a bond to pay for it, because that's traditionally how schools or any municipal buildings get upgraded. It's part of their capital budget. And so, green banks create an alternative pathway for them to access.
And in Connecticut, a lot of schools going solar under the Connecticut Green Bank Solar PPA program. A lot of focus there. Yeah, so
right.
Absolutely. Anything else?
Great example from Hawaii, $40 million in financing for upgrades at Hawaii public schools. Green banks all over the place are in the classroom.
That's a great one, Alex, too. Great. Okay, I just want to make sure we get to get some of our international stuff out there, and we can, I'll keep track of questions. So Andrea Kolnes, who's the international director, for you, tell us, what makes green banks a promising strategy in developing countries, and what's going on the ground? Are there any projects you can tell us about?
Sure. So I think I'll just start with an answer to your first question of why are they a promising strategy, with sort of a what answer and a how answer. The what answer is climate finance flows are far, far, far lower than what's required to achieve implementation of the Paris climate goals across the world, and with a particular focus on developing countries. Looking at some research on climate finance flows from the Climate Policy Initiative, there's roughly something like $650 billion currently, or as of 2017 actually, in climate finance flows around the world, and something between 1.6 trillion and 3 to 4 trillion is really what's needed. So I'm not breaking that out by developing countries, but I'm giving you a sense and the context and the flavor. And then I'll go to the how question. And this has been laced through the comments to date, but in developing countries, it's crystal clear that a unique dependence on development partner aid funding will never get them to the place where they need to be in terms of levels of investment. They need to and recognize and want to shift from a dependence on aid and grants more towards a mix with financing. So those precious public dollars can be increasingly used to leverage and mobilize private investment into the mix alongside the catalytic public investment. And there's increasing interest in that, not only in the developing countries, but in the development partners. Enter green banks as a really promising strategy to link those things together. And the graphic that you put up there is just one more bit of information on the fact that green banks work. This graphic represents the work of the members of the Green Bank Network, which is an international consortium of green banks that exist to support their work and share knowledge and disseminate the model. Really briefly, it shows that these existing members, and they're listed there on the left, I won't take the time to list them out, have invested something on the order of 24 billion in public capital to generate something on the order of 70 billion in actual investments, resulting in a lot of carbon reduction, 40.6 million metric tons, and I don't believe we have job numbers on here. That would be a really nice way to improve that graphic, but that's sort of just to give you a sense. And then, Kerry, I think your second question was on.
So could you talk to us about successes or even some failures of implementing green banks internationally?
Well, since there's not much time, I'll stay with the successes. How's that?
Okay.
Yeah. So it's hard. I don't want to pretend it's easy. We could talk forever about lessons learned and how we're approaching this, but the first proof of concept Green Bank is on the ground in Southern Africa. It is based at the Development Bank of Southern Africa. CGC partnered with the DBSA to support their efforts to create a new climate finance facility. It's a new $100 million facility with roughly half of the funding from the DBSA itself. That's the Development Bank of Southern Africa. Sorry, I slip into acronym soup. And the other is from the Green Climate Fund, which is the global pot of money, if you will, designed to help drive the Paris Agreement by providing resources from wealthy countries to developing countries and emerging markets. So that effort is significant because not only is it purpose-built, designed to catalyze private investment into specific market sectors that were the gaps and the challenges within their investment landscape. It's also really significant because it marks the first time the Green Climate Fund has invested in a green bank. And they are very interested in replicating this model. So I'll segue from that to work that is currently underway, interestingly, with a clear focus on Africa, which would really sort of point to the value of a proof of concept, right? Other countries saw what happened through the DBSA for Southern Africa, and that sparked their interest and possibility. So at this point, CGC is working closely with the government of Rwanda to create a new green bank. And we are working for the African Development Bank in a systemic way with both the support of the UNDP and also now the support of the Nordic Development Fund to look at the potential for green banks in 6 additional countries: Tunisia, Mozambique, Gambia, Gambia, that's Ghana and Zambia combined, and Uganda and Benin, a diversity of countries of economic sizes and economic capacities. We're looking at the potential for green banks there on a continuum with funding or national climate change funds. So there's a lot going on and a lot of potential on
That's
landscape.
exciting, very exciting to hear. So I know you don't want to talk about failures, I'll respect that, but can touch on the challenges, the unique challenges that you're seeing internationally.
Yeah, and I'm happy to talk about challenges.
No, that's okay.
Levity. So one of the biggest constraints, of course, right now is on sovereign debt, which is challenged in the developing country context generally. It's particularly challenged right now in the light of COVID and economic impacts. So we're understanding that forming green banks in ways that bring in the capitalization from a diversity of sources, be it the Green Climate Fund or development partners or other entities, and there's a wide range of development partners, bringing that money in often flows in a way that has to go through the government and then out to the climate finance facility or green bank. And that creates a situation where sovereign debt becomes a critical structural element. Limits on sovereign debt are informing and creating new ways for us to think about structuring green banks and capitalizing them to work within those constraints. At the same time, green banks are a powerful engine for rebuilding the economies of all countries. So including green banks in any given government's policy approach to rebuilding and then building beyond is a natural fit. It's just, you know, how things land in any given country in any given moment.
Yeah.
Great. And just to add something to that, I think this is either a challenge or sort of a blessing, depending on how you look at it. And you know, the green bank model is fundamentally, we're talking about development banking. You know, when for folks in the U.S. where there isn't a national development bank or an ecosystem of development banks, this concept is novel of using public dollars to enable mission-driven institutions to catalyze private activity. That sort of looks strange and different. But in developing countries and the rest of the world, there's a massive multi-trillion-dollar ecosystem of institutions at every level, from multilateral development banks to bilaterals to national development banks, that are designed to sort of that do things that look a lot like this. And I think one of the challenges about doing this in developing countries is figuring out how to take these green bank principles and have them match up and work within an existing ecosystem and set of institutions. And, you know, in some cases, having an existing institution or set of institutions to sort of bring these ideas into is beneficial. Sometimes it's actually easier to have sort of a greenfield situation, but it is something to navigate.
Let me just pick up on that for a second. That particular issue of should you build a new purpose-built green bank where you have complete control over mandate and structure is very tempting. However, we're really learning that in developing countries, it's obviously hard to do that, and often working within an existing institution becomes the better path. So I think that's what Jeff is talking about. So that's another area of challenge that we're constantly considering. And then I just have to mention Project Pipeline, because you can create the best green bank in the world and capitalize it and design appropriate market-driven products. But the development of bankable projects into 4 priority sectors, the flow of projects through those pipelines is a critical element. And joining a green bank to a project preparation facility with related grant support for early stage feasibility and project development, and perhaps early stage project funding so the project can in total become more financeable. That development of early stage project development to bring it from concept to bankability is a critical element in the developing world and not unique to developing countries. That actually is the model for the Clean Energy Finance Corporation in Australia and a number of other green banks as well.
Yeah, there's nothing worse than having capital sitting on the sidelines, not being able to go into projects. So for all of us in the green bank world, that's absolutely something we're focused on. So we have some great questions here from Jean Larson. What does the panel think about carbon pricing? Necessary or no? Go. Lightning round. What do people think?
Definitely better if it exists. It doesn't, I think my view is what does carbon pricing do? It changes the economics on a project by project basis. It doesn't change the fact that you still need the capital and you still have a whole host of barriers to overcome, because a carbon tax doesn't create a contractor network, for example, and sort of solve collective action problems, but it just means probably the amount of green bank capital that's necessary and the terms in which it is offered would change as a result of that.
Yeah, makes the economics themselves easier, not the barriers.
Yeah.
I'll just add quickly that, and this is my own opinion, not vetted through CGC, that carbon pricing is great where it exists, and it matters a lot what you do with it, because just pricing carbon will probably never get to the levels that we need to change consumer behavior. It's using that money in catalytic institutions like green banks to actually give it effect in the marketplace.
Yeah, that's great. So this, let's see, I've lost it in the chat box who put this question in, but I thought it was fantastic. It might be Franziska. What are the risks or hurdles for green banks, or even a national green bank, that would not make this effort go fast enough and far enough? Great question.
Yeah.
Well, number one, not enough money.
Not enough money.
That's probably the biggest risk. Beyond that, Jeff, what do you think?
I mean, I think a national green bank that took the attitude that, all right, this is no longer the private sector job, but this is the job of the public sector, and the public sector alone is going to solve this, that would actually slow this down. Creating a structure where the green banks, a green bank or any institution of government stands up and says, you know what, we're just going to make 2% money available. We're going to fully guarantee it. I don't care if the project is well structured. I don't care what the revenue stream is. I don't care what the risk is. We're just going to do it all. We'll just finance it all. That probably actually would slow things down, because from a political standpoint, at some point you actually do hit a limit on how much government is going to be willing to spend on this, and you're not but you're also crowding out and undercutting private capital from coming in. And there definitely is there's a moral hazard of financing every conceivable lousy project that comes in the door. You create some really negative incentives.
Yeah.
And I'll add, from a developing country perspective, going fast enough and making it real is the critical challenge. And I have found that the key to that is finding the right center point of government buy-in and leadership, and the host institution that can really make it go. When you have those, it can fly. When you don't, you can spin in place.
Thanks. Andrea, quickly for you, this is from Rick Mordozevich. Are you, sorry if I butchered your name, are you doing anything in Costa Rica?
We are not currently doing anything in Costa Rica.
Okay.
Another to a project for the Asian Development Bank on island electrification in the Philippines. So it's a different geography. It's not entirely, separate really in a way. And the focus on island electrification, I think,
is relevant. Yeah, great. This from Chris Mings. I think this is another good one for the US gang. How would states or provinces, or maybe just international as well, how would states or province green banks coordinate or not with federal or national or international green banks?
Yeah, I mean, I can say a bit about this. I think, at least in the US context, the National Climate Bank that creates the National Green Bank that we were talking about today, like, contemplates pretty deep coordination between these institutions. One, as everyone has said, on the provision of capital and the downstream of capital of federal dollars into those institutions. Two, also in some forms of standardization.
So a funder of local, state.
Exactly. As a funder of these institutions, like this would be the access point for many of these institutions to federal capital. There are some other mechanisms, but this is probably one of the more straightforward mechanisms. Two, and Kerry, I'd be curious to hear your thoughts on this, is some standardization across the market. And so right now we have, if you're doing energy efficiency, if you're doing energy service agreement in one place, it may look very different than energy service agreement in another place, or PPA. Right. Like a national climate bank could help, and green banks are doing this to a certain extent themselves already, but this could be accelerate standardization of documents and forms to enable more activity, secondary markets for these products, because everyone knows we're working off of the same documents. And I think finally is like that dealing with those projects that stretch across the jurisdictional boundaries of certain entities. So, you need to do transmission between 3 or 4 different states. You need to address a grid-wide project that's regional in scope. It's difficult to coordinate that. The National Climate Bank would be a really interesting mechanism for facilitating that kind of coordination.
Great. Anything on the international front you want to highlight, Andrea?
Well, on the international front, we are more often creating the equivalent of a national green bank.
Okay, so less relevant than in the U.S. context, where you have this proliferation.
Multiple institutions in a country often.
Yeah. Okay, great. We have another from an anonymous attendee. How do you think about the impact of animal agriculture, particularly in developed countries, and what sorts of projects can address this? That's something that I don't have any familiarity with on the domestic side. Something it is on the international front. Has there been any work on that?
Work on agriculture, sure. I'm not going to be able to answer it specific to animal agriculture. So agriculture is often a really significant component of any developing country's economy for a lot of reasons in terms of jobs, export values, et cetera. So in a lot of our work across the feasibility work that we're doing for the African Development Bank, we often find that climate smart agriculture services as a priority sector. And within climate smart agriculture, it is most often focused on irrigation. So efficient use of water, efficient energy use to access the water. And there are other climate smart agricultural practices in terms of agro-processing, that vary by country and by agricultural sector. But the short answer is it's a very important sector that's surfacing as a priority to do deeper analysis on and understand really what the market focus should be.
Okay, great. And then, domestically in the US, I would say anaerobic digesting projects, biogas sort of projects are something that need to be scaled up across the country, and so related, not exactly the specific topic, but related. We had another question earlier in the chat box that I thought was worth talking to the panel about briefly. How do investors find out about these green banks and these investment opportunities, whether you're the general public or a qualified investor?
So I can say the short answer is that anyone on this chat can feel free to reach out directly to us. You can get me at consortium@coalitionforgreencapital.com, and feel free to reach out and send a note to me. The short answer to this is that we're building our profile in these types of forums, or we're trying to, and I think this is qualified as a success. I think we're not well known in a lot of these circles, and so we're kind of getting our way in, because we do offer, as Jahi referenced earlier, a really pinpoints investment opportunities so that you can see the results. You're not just investing into a passive index fund or something like that. You invest with a green bank, you can go touch the solar panels. Well, I wouldn't recommend that actually, but you can go get within a couple feet of the solar panels that your investment has funded. So yeah, just feel free to get in touch with any of us. Visit our website at greenbankconsortium.org or coalitionforgreencapital.com, and that's how you get us.
Yeah.
I'd like to add
just Andrea.
Yeah, so I heard another, in addition to what Alex said, I think I heard another question in what you asked, which is how do investors find out about green banks once they're placed in a market? And that is a very important question. Any given green bank definitely needs to invest proactively, systemically, and effectively in market outreach, because you can build it, but they will not come if you don't know that they're there. So really working to create an effective communications plan and market outreach plan and strategy is a critical element of green bank operation.
Yeah. Domestically, many of these efforts have been local or state-based, and so they're known in their own markets and known to the capital providers in the markets. And I think the state and local green banks have done a really nice job of making opportunities known and kind of growing the ecosystem of capital providers in their states. When I was at the Connecticut Green Bank, we spent a lot of time building up relationships with our local lenders and regional lenders. And that's great. But as this, the need as Reed, I think I wrote down $400 billion a year, right? I mean, that's way beyond what, the current scale of investing activity is. And as we do raise our profile, Alex, in these circles, folks are going to be like, how do I get involved? How do I invest? So it's something that we need to do a better job of. And on the question on the individual front, that's something we've been challenged with as well. And we know there's appetite, especially, folks want to be able to invest in projects that, are with their values. There's a great example of the Connecticut Green Bank issuing green bonds and opening up a slice to retail investors. And that was really exciting. It was very hard. It was a lot of work plowing that ground the first time. But now the Connecticut Green Bank has that capacity as it issues more green bonds to bring in retail investors. So I do think as an industry, we all have work to do to allow more and more types of investors, including retail investors, to participate. I think that means us getting involved in some of the platforms that are out there. And figuring out how to productize our investment opportunities so that they can be offered on some of these platforms that cater to impact investing, ESG investing. Of course, on the debt side, we're not on the equity side, so that's important. Any other comments on that? All right. I don't see any more questions. Paul, let me know. How are we doing on questions? I think we got them all.
Yes, we did. And there's active chat going on too. I'd say one question for everybody as we start to wrap up is, how much has the book Drawdown, which lays out 100 different initiatives, including one like a focus on women-driven projects? So like in microfinance, there's a lot of women supported projects, which are high return on investment. Women repay loans that they take to boost the family and the income. So how does that fit green banks?
I mean, I'll just, as a practitioner, I say like, yes. I mean, it's like a roadmap, right? Of like, these are the sectors that need to be, and the opportunities and project types that need to be addressed. And so for many green banks, it's like you're starting with your market and figuring out where is there immediate need and appetite, or where is there the opportunity to develop a market? And everything we're doing is on that list somewhere, but I don't know that we're doing everything. And maybe Jahi or others have thoughts on that. No.
No, I was going to say the same thing, which is I think you're right. It's a powerful roadmap. I think what makes state and local green banks and National Climate Bank a really interesting model is they try and take those what we know to be the right types of investments and draw them really down to where the rubber meets the road and actually do transactions. And so it's like, yes, we all agree women-owned investments are high ROI. So what does it look like to actually put equity or debt or working capital behind those types of institutions in real cities and states across the country? And so I think green banks are trying to bridge that kind of last mile with a lot of those investment categories, and I think it's a really powerful function, and a powerful function for those who are interested in kind of impact.
And one last heritage question. So, in impact investing, the social impact bond the name was coined in the UK, and a bond really meaning a contract versus like a bond. How did Green Bank become sort of the umbrella term here? Is it inclusive of banks? Is that where it started and grew out of that? Like, how does it all snap together? Because you think
I don't know. I mean, like in Connecticut, we started out with the Clean Energy Financing and Investment Authority, which was nicknamed CEFIA, which is awful as a name, right? But everybody colloquially called it the Green Bank. It just that was the nickname. And then we changed our name, but at the same time, Alex, the Coalition for Green Capital, I think you adopted the nickname too, or maybe there's some other origin story I'm not even aware of.
Yeah, we worked with then Representative Chris Van Hollen from Maryland to introduce the Green Bank Act of 2009, and Green Bank was a way that it's a unsatisfying term in the sense that you have to immediately define what you're not. However, it also is a term that sticks in the mind and has really created. Kind of created its own brand over the past decade, so we're pleased with that. Yeah, I don't care. I don't even know I told you that, but I was partially responsible for that awful name you guys were doing.
Was a mouthful.
In the legislative negotiations. There was such political aversion to the use of the term bank right after the financial crisis that we had to pivot. And just like the boy named Sue, we gave you that awful name, but you succeeded anyhow. But yeah, that's the idea behind it, is that what we're doing is we're driving investment, we're maximizing investment in any ways that we can, and we live under a house called the Green Bank, and that's stuck, and that's what we're sticking with.
All right, and then just I'm gonna look like the voice from above because I see to the audience. You can't see my video because there's some Zoom security going on. So, Kerry, you want to wrap it up, and then we'll turn it over to Nigel for good.
Yeah, sounds good. Well, first of all, I just want to thank everybody who joined us today to listen in on really the exciting growth that we've seen in green banks over the last decade. Reed's words were inspiring, terrifying and inspiring at the same time, but also, really speaks to the big opportunity and then the need to step up domestically. Thank you to Jahi and Jeff and Alex, great friends. We've known each other for a long time, and love the work that you're doing to build up this industry nationally and internationally. And Andrea, thank you for all the perspectives on the international front and the unique challenges that are going on there. So I want to thank all of you.
Kerry, thank you for your leadership at Inclusive Prosperity Council, not only moderating a great
conversation. Yeah, so all of you in ESG land, we hope to be better friends and to continue to get to know each other better because we need each other. We have a lot of work to do in front of us, but I know together that we're gonna get there. So thank you, Nigel, Paul, Nick, for hosting us.
Fantastic. Thank you, Kerry, very much. And thank you to all. I think it's been a really fascinating and really encouraging discussion. I was going to say just one thing about green banks from an investment advisor's point of view, and we helped to finance a couple of gigawatts of solar PV in Australia in the last 2 or 3 years. And having a green bank, and it's called something slightly different in Australia, but let's not worry what the names are. has been helpful, but for there to be real clarity as to what is the mandate of that entity, and effectively the more independent it is, probably the better, so that you know what you're dealing with, is really helpful. And obviously Australia's been through some interesting politics around all of this over time. We like to end always with a bit of good news and a little bit of focus on what can we all do now. And I noticed in the chat, I think it was Lauren Agnew was talking about the importance of collaboration, and indeed, as Kerry has just been doing, and there's certainly nothing more important than that. It struck me just reflecting on this in terms of what you need. First and foremost, this is all about people and people that can work together. And I looked at the map of where the green banks were around the world, and I also looked at the map of where our audience comes from. So there's something in the alignment of those two things. Secondly, it's all about practicality. The logic for many of these investments is there. The capital is there if they're put together in the right way, but bringing forward projects which are complete enough that people can act upon them, and that some of the difficult steps early on where you just don't know whether the project is going to be ready for financing in a month or in a year, that's incredibly important. Pipeline is the next part, which is building momentum. A single project in one country around one set of issues could be really interesting, but if that's the only thing that's going to happen, it can be really hard to attract attention. And then I wanted to come back to at the end, the fourth really important thing, once again, is the people. How on earth do you build a story which is compelling and you can get people engaged with? For a couple of other actions, one thing we wanted to mention coming up very shortly, there is a discussion which is running on, I think, the 23rd of September. The details are here, and the details of this are on the ESGX.org website, a discussion around the green economy, and this is coming from the Biden campaign. I think this will be tremendously interesting to watch and dial into. If you'd like something to read, there are a couple of great books here. One is Reed's book, A Crisis Wasted, and coming up, you can order it now on Amazon, the Impact Investing Handbook. Again, something which is thought-provoking for everybody. I was going to share a couple of others as well, which is, it comes back to how do we pay for some of these things if we need more money. We had Stephanie Kelton on the show a couple of weeks ago talking about her book, The Deficit Myth. Absolutely fascinating and well worth reading. Two more here, Reimagining Capitalism in a World on Fire. And the third one from Rishad Tobacco from the advertising world is partly all about how do you tell stories and get people engaged. So with that, I will hand over to Paul Herman to finish the show and talk a little bit about what we've got coming up next week.
Well, thanks, Nigel. And thanks to Nick Gower, our producer, and who orchestrated and set up today's discussion with Reed Hundt, Alex, Kerry, Jahi, Andrea, and the team. So I want to thank everybody for their insights and wisdom and really paint a path towards solutions. That's what we're about here in the ESGX community. So feel free to share this and the 26 other episodes to date with your friends. They're free and online at esgx.org. Our next episode, we'll have our ESGX partner episode next week, as Nigel introduced. And then we'll be back in 2 weeks with the Green Jobs Report. Again, this is a monthly review of the detailed jobs information and the underlying sustainability, the environmental, social, and governance sustainability of the employers and whether those jobs are going up or going down. And spoiler alert, green jobs are more resilient, they pay better, and they're stronger during a crises, the crises that we're in now of COVID and income inequality and our climate crisis and our racial justice crisis. So we can bring all this together. So all of us here are systems thinkers and systems doers. So please join us in the Green Jobs Report with a special focus on healthcare. Carolyn McClanahan, who you might see on TV often, she'll join us as well. So thanks again. Thanks to my co-host Nigel Lake in New York, sometimes in London, sometimes in Sydney, and sometimes in the air. Nick Gower, our producer, and we'll look forward to seeing you next time on ESGX.